Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at UPS, FedEx, Costco, Target, Macy's, Walmart, JCPenney, and Sears. Okay, so first up, let's look at ticker symbol UPS. This is United Parcel Service, and so yeah, back above 30 on RSI. So that is a signal that it had been oversold. It's a good sign. It's back above 30. Want to see that work its way back up to 50. So it's that's a signal the chart is heating up. Fasto is back above 20, and so if it can break above 50, that would be a good signal that the chart that the share price wants to head higher. As you can see over here, last time it was below 50 and then broke out above. It ended up having a nice run. So a break above 50 would be good to see. Also, an uptick on plus DI. So the green line spiking up. Want to see that continue heading towards minus DI and then crossing over. Okay, there was this bearish crossover, and then now the bulls are looking for a bullish crossover. The green line crossing the red line to the upside. And so what happened here? There was a giant drop, and then it found support down here in this 104 to 106 range, 107 range, and so it's been 107. It's been trading in this sideways channel. And then today it finally broke out above the top of the channel. The closing price here on the 15th was the key level to break, and so that was the high close horizontal resistance level in the top of the sideways channel, and so that was one key level to break. And then the other key level was EMAs 4 and 8. It had closed just above EMA 4. That's the pink line on Friday, and then so today was the first close above EMA 8, which is at 106.73. That's the line. That's the first close above that level since back here on this day, right before middle Bollinger Band support broke. So yeah, the last time UPS was above, 2 days before it was above the middle Bollinger Band, that was the last time back in January that it had closed above this key resistance level. So that is a sign that the chart is heating up. What bulls want to see is the pink line cross over the lime line, and so right now EMA 4 is at the pink line is at 106.48, and then EMA 8's at 106.71. If you see EMA 4 at a higher price than EMA 8, that's going to be an early reversal signal. So that's the next step that you want to see happen, along with the break above the orange line, which is EMA 13 at 108 into 108.37. So if it can get above that line, then the next big level to break will be up here at the 300-day simple moving average in the middle Bollinger Band, up here at this 111 resistance zone, and so it's going to need to get above those levels to get a new uptrend going. So right now it's trying to break out of this sideways channel after finding support. It did fill the gap. There was the gap between low of day on this candle and high of day on this candle, and so that gap did fill today, and right now it's hitting top of gap resistance. That's also EMA 13. So if it can close above the top of the gap, that is going to be a signal that it wants to head higher, similar to the close above the top of high close horizontal resistance. Yeah, there was a PSAR bull flip today. Notice the green dots flip below the candles for the first time since the big drop. SAR stands for stop and reverse. And if you look over here, when the green dots were above the candles during the consolidation, when they flip below, you can see it signaled the start of the uptrend. And so here the dots have been above the candles the entire time until today, and so this could signal the possible start of an uptrend. There was a MACD bull cross last week, and then the MACD is pinched on the 12, 26, and 9. But as you can see here with the histogram bar, it has started to cross over, so it's just slightly above the zero line. So yeah, so the MACD line is starting to cross the signal line. And now if you look at the UPS 15-minute chart, what you'll see here is a nice breakout. Started on Friday. The middle Bollinger Band turned into support. The dotted purple line, it got above the 50 simple moving average, and then it closed above the 100 simple moving average. That's the gold line. The green line is the 50 simple moving average. And now notice how at the end of day here, the green line has crossed above the red, gold, and blue lines, and so that's a really strong move. That's what you want to see. You want to see the green line now stay above those levels, and then have the yellow and red lines follow with the blue line, which is the 300 simple moving average on the bottom, and that would set up a bullish chart. Right now it is bullish. It has a nice strong uptrend. The candles are riding EMA's 4 and 8 support. It failed to make retest that high today. When it bounced, it came back up, and it didn't get up to the previous high. high, so it's going to need to break that level. That's up there around 108. 30 or so, between 10 just getting close to 108.40, and so as you can see here, now it has a descending resistance line that needs to break, because it bounced off of EMA 13. The orange line held. It did break below EMA's 4 and 8, but it hit EMA 13 and it held. So it never even tested the middle Bollinger Band the whole day. So it was really strong all the way into the close. And there was loading off of EMA 13. You can see 107. Down here, there was a big volume spike on the close. And so if you see a break above 108.40, that's going to be a signal, okay, yeah, this is breaking out higher. It's going to the next level. If it drops below 107.60, that's going to be a signal, okay, it's cooling down. And then the downside risk is it could drop down to that lower Bollinger Band here, or the way down here where all the moving averages are, way down at 106. So that's the downside risk if it pulled back. And then if you're looking at the weekly chart, this is the UPS weekly chart. Each candle represents 1 week of trading. You can see the big drop from 134. It found support down here at 103. And then, it's been traded sideways here at this 105, 106 level. And then this week, it's starting to break the gold line. And so that's the 100-week moving average at 107.93. So basically, if you can close above 108 for the week, that would be really bullish. That's a key level to break. Notice how it's holding, support from back here. This was a big resistance. There was a channel over here, a sideways channel between in 2017. Between February and June, and then it broke out from the top of that channel. And so right now it's hitting the top of the channel from back in 2017. And so what bulls want to see is a close above 108 and then get above this EMA 4 at 109. That's the next target, EMA 4 at 109. And if it can break that, then that would signal that it wants to head higher. The candles are working back to that level. Now let's look at FedX, ticker symbol FDX. It closed above 50 on RSI, so that's heating up at 54. You got Fasto up there at 97, pinched here, starting to pinch on plus DI and minus DI. You want to see that green line cross the red line to the upside. And so on Friday, there was a bullish close above the middle Bollinger Band. That's the dotted purple line, also the 20-day simple moving average. And then on the last chart, when I was talking about the crossover on with the green line, or the pink line crossing the green line, you can see it right here. Notice how the pink line is below the green line, and then at this right here through these two candles here, that the pink line crosses above the green line, and then that signaled the start of this uptrend. That's what you want to see happen over here. You want to see the pink line cross over the green line, and then the candles riding both levels higher. And so that's what happened here, just showing you that as an example. And then you can see here it's above the middle Bollinger Band, and the next key level to break is the 50-day simple moving average at 255.44. And so if it can close above that level, that's going to signal that okay, yeah, this uptrend's intact. And then you want to see it stay above the 50-day simple moving average to get it to run back up to that 275 level, or the upper Bollinger Band here at 266.91. That'll be another key level to break. If it fails to get above that 255.50 zone, then it could pull back and test that middle Bollinger Band. It has to hold the middle Bollinger Band at 249 to keep the uptrend going. It's trying to start a new uptrend here. Notice it has the MACD bullish crossover, the MACD bull cross here as well, and then it had the PSAR bull flip, the dots flip below the candles last week. And then if you look at the FDX 15-minute chart, you can see here it's in a very strong uptrend. And so it's been holding the middle Bollinger Band, the dotted purple line, when it's been tested. And so if it comes down here and tests this middle Bollinger Band at 25.36, and that fails to hold, that'll be your signal, okay, yeah, it's cooling down. And that's where it could possibly drop down to the 50 simple moving average at 251.83. That would be the next big support level below. If you notice here, when it broke below the middle Bollinger Band, that's where it found support down there. And the 100 simple moving average, drop to the 100 would be way down at 249, the 249 zone. But yeah, as long as support's holding, the middle Bollinger Band's holding, the signals to keep riding. It needs to break about 255. Above 255 will signal it wants to head higher. Okay, now look at Costco. Costco made a very strong move today. It's at 57 on RSI, so it's not at overbought levels. Let's see here. It's hitting right where it had the previous top on this run. And so if you on RSI, so yeah, we'll see if it it can keep breaking out higher here. It was a very strong move after it closed above the middle Bollinger Band here on Friday, and also above the green line, which is the 50-day simple moving average. It did that on these two candles as well, and then it pulled back. And so you're looking for a bullish change in trend here. Closing above the previous high close was a good sign. So you want to see it stay above this level. If it pulls back below that 191.50 zone, then it could drop back and test that middle Bollinger Band. As long as the middle Bollinger Band and the 50-day simple moving average hold that 188 support zone, then this new uptrend should continue. What you're looking for is a break above this 194 level, and then if it can get above 194, it's back up to test that recent high up here, in January, up here just above 198. Okay, so yeah, so Costco is very strong right now. We'll see if it can keep pushing higher. Now let's look at Target. So Target here, ticker symbol TGT. Okay, so it's up here at 62 on RSI. It has the same kind of thing on RSI where it's hitting the previous level. Okay, this is where it found some resistance last time. All right, so when RSI was at this level, that's when this happened, and so we'll see if it can bust through resistance here and then get back up. What bulls want to see is they want to see this. They want to see it bust through the 60 zone and get back above 70, and that's where it can get pushing, right? Because that's where this big move happened. It can top out that way as well. If it can have it could have a multi-week run the way it's moving right now. If it can stay above 50 and then push above 60 and be able to hit up there and stay above 70 if it gets up to that level. But first things first, it's hitting a key zone right now. Okay, the closing price here on January 22nd is the key level to break. It's at 78. Notice how it dropped down. It found support, off of the 50-day simple moving average, and then now it's filling the jar back up to that level. It's hitting the upper Bollinger Band at 77.28. That's that solid purple line. It has to bust through that. But when it hits that 78 level, that could signal the top of this run. Notice it's on a 4-day run right now. So yeah, be careful here. It's got a it could form a double top, and if it forms a double top, you will know that it's going to consolidate. Or one signal would be that it possibly could is if EMA4 at 75.54 support breaks. That's when it consolidates and pulls back to the middle Bollinger Band. Notice how the candles here are right above the pink line, and then right here it closed below. And that was the signal that it was going to work its way back to the middle Bollinger Band. That'll be your early clue. So 78 is the big level to break. And then if you look at the weekly chart here for Target, each candle represents 1 week of trading. You could see this is the came up and hit the double top level, and it busted through. So there was the top in November of 2016. It came up here, it broke through the top of that level, came back below, and then now it's coming back up to test that level. So the closing price here on the 3rd week of January is the key level to break, and you can see there it's like the 77 to 78 level. If it can close above that level for the week, that'll signal it wants to head higher. If it fails to break, that would signal a double top at that zone. You want to see it hold the EMA4 at 75.38. As long as that level is holding, the chart is super bullish and the signals to keep riding. The last time, that big dip in the markets, it hit EMA 13. But yeah, this is a really strong weekly chart. It just has to bust through that 77 to 78 resistance. Okay, let's look at Macy's. Macy's had a very bullish close today. Yeah, it's got RSI at 62 up here. Yeah, this is another prior level of resistance. So you could see, yeah, this is where where it hit tops before, is in this zone. But yeah, today it did close above high close horizontal resistance. The closing price here was the key level to break, and then it closed above that today. So you want to see that level turn into support. If it can turn into support, then that'll be a signal it wants to head higher. If it fails to stay above that level, it fails to stay above this 2740 level, then it pulls back in to the back in to test this EMA4 at 2672. Then that's a signal of a possible double top. So the risk is that it forms a double top here. So you want to see it bust through the upper Bollinger Band at 2769, and then keep pushing higher. That's this level right here. Failed to get through resistance here, and this is where it could cool down. If you look at Macy's on the weekly chart, once again, each candle represents 1 week of trading. It came up here and it's forming the double top level, okay, with the first week of January. So it has to bust out through this 2745 zone, 2750 zone, and then right above it is the 100 week moving average at 2825, and so that'll be a big level to break. Notice how that's lining up with a key support level from back in March through May of 2017, and so the candles are bumping up against what used to be support. So what was support has turned into resistance. So it's going to need to bust through, and then you'll know that it's ready to head higher if you see it above 2825. If it fails to break this 2750 to 2825 level, that's going to signal a temporary top. You'll know it's cooling down once again if EMA4 at 2663 support breaks. Notice the volume. It has a declining volume pattern. So keep that in mind as well. This is just the first trading day of the week, though. Let's look at WMT. So Walmart, had that big pullback, right? So it got pummeled. It's got Fasto down here, had the crossover. It's below 20 on Fasto, so you don't see that often on a stock like Walmart get hammered like that. It bounced off of RSI at 30. So it came down. It's found support down here in this 9150 level, and then it's hitting EMA4 at 9370. That's the pink line, and so if it can close above that, that's going to be your clue. Okay, now it wants to head higher, and then it could run up here to the 100-day simple moving average in EMA8, this 9550 resistance zone. That would be the next target. So 93 above 9370, and then it could run up to 9550. Fail to break 9370, and it's a risk to hold. This could possibly form a bear flag here, so you have to be on the lookout for that. It's got it looks like if it comes up here and it fails to break resistance, this could be a flag. It came down, bounced up. It's got to get above this level. If it does, that's how you'll know the bounce is ready to continue. If it can turn EMA4 into support. Notice when it got the last bounce up here, and it broke above EMA4 on this candle, it did run up to the middle Bollinger Band. So the middle Bollinger Band's way up here at 100. So keep an eye on this, because it could end up being make a nice move if it gets a good bounce going. Okay, so 95.50 is a big resistance level to break. Take a look at JCP. Okay, this is up here pushing 70 on RSI. Notice it tends to top out at this level. It's very rare for JCP to get above 70 on RSI. So keep in mind it's pretty frothy here. Check out Fasto at 91. This is where it finds temporary tops. It's up here in the frothy zone. We call it frothy is that it's getting overbought. There's not a lot of room on the indicator left. When you're up in the 90s and 100 is maxed, there's not a lot of room. And then if you have to look back at the history. When we looked at some more quality stocks, they have a history of being able to head higher above 70 on RSI. But when you see a stock that never can get above that level, well, probably the next time it hits that level, it'll be a top again. History tends to repeat, and so you want to anticipate history repeating until a new trend begins. And so right now this is breaking out today, okay, above high close horizontal resistance. It was a good close. It needed to close above this January high close level, and that did happen today. So that was, it's been amazingly, it's been very, very strong. And so if you come over here and you look at September, that's the next high close level to break. If it can close above this 430 resistance zone, that would be very bullish. There is this gap over here. I should have put that in for you. There's a gap between low of day on this candle and then high of day down here on this candle, and so this gap could possibly fill between these two candles, which would put it up here at 470 is the top of the gap. So it's a really important level. If you see JCP above 430, there's no space, there's no resistance. There's going to be some resistance from over here, right? From these candles over here, of course. But a lot of times 450 or whatever. But a lot of times it could get some juice going and get that gap filled if it gets breaking above the top of the gap. Keep in mind 450 will be a big level to break. But yeah, keep an eye on JCPenney. It could top out here. It could, hitting, it doesn't have a lot of juice in the tank to keep pushing higher. And so if it does top out here, you'll know it's cooling down if EMA 4 at 403 holds. It really needs to stay above the 200-day simple moving average currently at 397. If it drops below $4, that's going to be a red flag. It needs to stay above 4. Now that it's above the 200-day simple moving average, it needs to turn that level into support. Okay, and then finally let's look at Sears. And so Sears is below 50 on RSI. As you can see here, it struggles with getting above 50. It's hitting its prior resistance levels. Each time it's hit this level, this is a top zone for it, because it's in a really nasty downtrend. And so it's going to be a bullish change in trend if it can get above 50. That would be a real signal that, oh my gosh, Sears is finally trying to do something here on the bullish side, because it's been really bearish for a long time. It does have RSI heating up here. It needs to stay above 50, and then we'll see if it can head higher above 80. That could be a struggle. Plus DI, you're looking for a crossover here, the green line crossing the red line to the upside, and so it's in the process of trying to start a new uptrend. So last week it closed above the middle Bollinger Band. It had a couple days it closed above, and then it pulled back, and then now it has 2 closes in a row above the middle Bollinger Band. That's currently at 238. That's your stop loss level. You don't want to hold if it drops and closes below that level. It just signals downside risk, possible consolidation. But if that level's holding, then it's in play. Now it needs to break this high close horizontal resistance level from the 15th. If it can break above that's just above 260, then you're looking at the upper Bollinger Band at 273. You always have to bust through the upper Bollinger Band. But then the next target's going to be up here at $3. This 308 50-day simple moving average, the green line here, and that's lining up with the top of this descending resistance line. Notice that there's a descending, there's a previous channel, and so this was the bottom, and so in the top, and then it came down here and it broke through the bottom of the channel and made the new low. Well, now it's back in this previous channel. And so it's back in the channel. It's at the bottom of the channel. If it can bust through this 250, 260 resistance zone, then it could run up to $3 back up to the top of the channel. That's the upside potential. Failed to break 260, and then it could go down there and test that middle Bollinger Band. And like I said, it has to stay above the middle Bollinger Band to remain in play. It is a very light volume, so keep that in mind. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and check out the link. I'll post the link below the video for our chat. Okay, thank you.